If you're a beginner investor and you want to get started investing in the stock market, here's what you should know about investing apps. I'm Gordon Gottseggen, the retail investing reporter at MarketWatch, and we're going to talk about some of the retail investing apps out there. There's no one best investing app out there, but there are a lot of different apps that cater to different types of investors. If you're a beginning investor who wants to try picking out your own stocks and ETFs, there are apps like Fidelity, Robinhood, M1 Finance, Public, Webull, the list goes on and on. All these apps make it very easy to open an account and then start trading stocks on your own. What you want to look out for is just an investing app that offers a self-directed brokerage account. This means that you can just create an account, log in, deposit some money, and then start picking stocks and ETFs that you want to invest in. Ever since Robinhood broke onto the scene, and they introduced this zero commissions model, but that also means that it's important to understand the fees attached to every investing app. Some of these fees are like payment for order flow. This is a revenue model that Robinhood does where they take all their customers' trades, they essentially sell them off to a market maker, and then the market maker says, we'll execute those trades, and here's your finder's fee, Robinhood. Here's a cut of some of the money that we make off of these trades. On one hand, it creates a business model where zero commission trading can exist, but you're kind of being nickeled and dimed a little bit as a retail investor. You end up paying whether you realize it or not, either through wider spreads or there's some reason that the market maker is willing to pay so much just to process your trades. It's important to think about that. Some fees that are a little bit less hidden are subscription fees. A lot of investing apps out there offer subscription fees as a way to give you more premium features, whether that's more advanced data or the option to trade in different ways using things like options, using margin, or more benefits for advanced traders. Sometimes you'll get hit with a fee if you try to do something like deposit money and that deposit bounces, or if your brokerage has to do an ACH wire transfer. These fees are usually listed on the brokerage's website. Usually you can find these out by looking into reviews or just seeing what people are saying. One of those red flags is bad customer service. If you trust a brokerage with your money, you should be able to contact them. You don't want your money held for ransom when a trade doesn't process or something goes wrong and you can't access your account. Another thing to look for is what we call gamified features. Regulators have really tried to crack down on this, but certain investing apps would shoot confetti or make it fun to trade. Trading more doesn't suit every investor. Sometimes trading more actually means you're losing money. So these apps that incentivize trading can sometimes create a conflict of interest. Look out for that. Fortunately, you still have to do the work yourself. What that means is coming up with your own risk tolerance, trying to figure out how long you want to invest, what your time horizon is, figuring out your strategy. These are things that you have to do on your own before you open an account or before you start investing. But what investing apps can do is they can really lower the bar to entry. They can make it much easier for investors to get started as beginners, or they can provide more advanced trading options for people who are a little bit more comfortable and really want to level up their strategies.